Effective January 1st, 2026, Nigeria's tax landscape will undergo its most significant overhaul in decades. These changes are driven by four new laws signed in mid-2025: the Nigeria Tax Act, Nigeria Tax Administration Act, Nigeria Revenue Service, Establishment Act and Joint Revenue Board, Establishment Act. The reforms aim to simplify the tax code, reducing roughly 14 different laws into these few acts, reduce the burden on small earners, businesses, and increase compliance for wealthy individuals and large corporations. 1. Personal Income Tax, SHIT or PIT, changes. The new law introduces a progressive tax system designed to protect low-income earners while taxing higher earners more heavily. Tax-free threshold. If you earn 800,000 naira or less per year, approximately 66,666 naira per month, you pay 0% tax. You are completely exempt. New tax bans. For those earning above the threshold, the tax rates are progressive. First 800,000 naira, 0%. Next 2.2 million naira, 15%. Next 9 million naira, 18%. Next 13 million naira, 21%. Next 25 million naira, 23%. Above 50 million naira, 25% remote workers. A significant economic presence rule now applies to individuals. If you live in Nigeria but work remotely for a foreign company, you are explicitly required to file and pay tax on that global income. Exemptions. Compensation for loss of employment is now tax-exempt up to 50 million naira. 2. Value-added tax, VAT. There was significant public confusion regarding a proposed VAT increase to 10% or 12.5%. The rate. The VAT rate remains at 7.5%. The proposal to increase it was rejected by the National Assembly. Zero-rated items. To lower the cost of living, the list of goods with 0% VAT has been expanded to include basic food items, medical and pharmaceutical products, educational books and materials, tuition fees, nursery to secondary, public transport, shared road transport, revenue sharing. The formula for sharing VAT revenue has changed to favor states where consumption actually happens. Federal Gov, 10% states, 55% local govs, 35% 3. Corporate income tax, CIT. The system is now split clearly between small and large companies to encourage entrepreneurship. Small companies. Turnover less than or equal to 50 million naira. 0% company income tax. 0% VAT collection responsibility. You generally don't need to charge VAT. Large companies. Turnover greater than 50 million naira. 30% company income tax, standard rate. 15% minimum effective tax rate, ETR. This applies to large multinationals. Turnover greater than or equal to 50 billion naira or part of a global group. If their accountants use loopholes to drop their effective tax rate below 15%, they must pay a top-up tax to reach that 15% floor. Development levy. A new 4% development levy on assessable profits is introduced. This single levy replaces the multiple smaller levies companies use to pay separately, like the tertiary education tax, IT levy, police trust fund levy, etc. 4. Capital gains tax, here CGT. Digital assets. Profits from cryptocurrency and other digital assets are now explicitly taxable as capital gains. Stocks, Josh shares. Gains from selling shares in Nigerian companies are exempt if the proceeds are reinvested in the same year. There is also an exemption if total disposal proceeds are under 150 million naira in a year. Rate. For companies, the CGT rate increases to 30% to match the income tax rate. For individuals, it aligns with your personal income tax ban. 5. Administration and compliance. New agency, the Federal Inland Revenue Service, FIRS, has been renamed the Nigeria Revenue Service, NRS. Tax ID is mandatory. A tax identification number, TIN, is now mandatory for opening or operating a bank account and for most government services. Customer identification. Banks and financial institutions must report individuals with monthly transactions exceeding 25 million naira to the tax authorities to catch tax evaders.